The Securities and Exchange Commission is ringing the compliance bell loudly. All capital market operators have been instructed to declare where they stand and ensure every tradable instrument is properly registered under the new Investments and Securities Act 2025 before January 2026 rolls in. Now, SEC DG Emomotimi Agama says the revamped act drags Nigeria's capital market firmly into the modern era, tightening investor protection, boosting transparency, and giving regulators sharper tools to tackle everything from digital trading risks to Ponzi schemes and other systemic landmines. With clearer mandates and stronger investigative muscle, the ISA 2025 brings Nigeria closer to global best practices. And according to Agama, the ultimate goal is simple: build a deeper, smarter, and globally competitive market that can actually power Nigeria's economic growth. Now, joining us to have this discussion is Samuel Oyekanmi, and he is the Research and Insight Lead, Norenberger Financial Group. Good morning, Samuel.
Thanks for having me.
All right, so with the ISA 2025 shaking up the rule book, everyone wants to know which reforms will actually move the needle. Now, what key changes introduced in the Investments and Securities Act 2025 will have the biggest impact on Nigeria's capital market?
Yeah, I think there are quite a number of them, right? It really scales from the very basic things to many other significant changes in terms of the reforms and in terms of some of the items in the Act. I think one of the very first things that every participant in the capital market will be interested in is the fact that it reinforces the power of the SEC to pretty much regulate and govern the investment landscape in Nigeria. And that started from the definition of securities, which had bring in a bit of some of the other items that were not previously captured as part of securities under the purview of the SEC. So you see things like digital, especially digital and virtual assets. Don't forget, Nigerians have experienced quite a number of Ponzis that have been masked as some form of digital investment platforms. So the SEC is trying to curb some of this. I would say the likes of private capital vehicles such as the PEs and then the VCs of those worlds also now being explicitly under the purview of the SEC. I think that's one of the things that's quite interesting. Other would involve the stronger enforcement in terms of how the powers of the SEC to investigate, subpoena managers and other players in the capital market in order to ensure that they are able to, of course, protect the public. Of course, at the end of the day, it's about the public's funds, right? There's also things around digital assets and fintech rules, which also enables pretty regulates around what fintechs are able to do in the investment space. And I think one that has also been flawed in the past is also the mark to market in terms of reporting of the fair value of assets for fund managers. I think that is also one of those things that would make a very significant impact in terms of the capital market going forward. I think that, of course, the deadline for that is 2027. There's like a 2-year transition period. But a couple of these things put together are some of the items in the ISA Act that pretty much changes a lot of the things happening in the capital markets.
All right, so the deadline is actually for January 2026. And looking at it, the SEC isn't just giving a nudge. It's setting a hard deadline that operators are going to end up scrambling to meet up. So why is SEC requiring all capital market operators to register every tradable instrument before that set date of January 2026?
Of course, when I said 2027, I was talking about the mark-to-market, the announcement that was made a couple of months ago. But bringing it back again to the recent announcement around the ISA 2025, of course, you expect that capital market players would they will have some level of compliance because, of course, this act has been signed earlier in the year, and then they are not really new in terms of course, any fund or any instruments that you want to have. Regulations stipulates that you're meant to register it with the SEC before you take public funds, investing in whatever it is, be it tradable assets or any form of other private funds that you have put together. What this SEC is now saying is that they will be clamping on all managers and operators who do not comply with these regulations. And I think it's just a no-brainer, because what it does again is that it ensures legal compliance with the ISA 2025. It also helps to improve market integrity and transparency. And what we've seen in the last 1 to 2 months that we have now is that it gives these fund managers who might not be in compliance at this point in time to have that kind of transition and smooth roadmap towards ensuring that they meet the stipulations of the Act.
All right, we'll take a short break, and when we get back, we'll wrap up we'll continue this discussion, pardon me. So please do stay with us. You're welcome back, and we're going to be continuing our discussion on the ISA Act 2025. And we have Samuel Oyekanmi, the Research and Insight Lead for Nuremberger Financial Group. And also joining us is Compliance Manager for Wealth Bridge Capital Partners Limited, Oluwarinumi Olawale. All right, great. So investor protection is a major factor in this act, and it has long been the Achilles heel of the market, and the new act claims to be the fix. Now, how will the ISA 2025 strengthen investor protection compared to the 2007 Act? Oluwarinumi, throwing that to you.
Okay, thank you so much. So when you're talking about Investors Protection Fund, initially it just covers negligence in the side of the capital market operators and also bankruptcy. But now with the new ISA, it has extended to revocation of license, and that will bring in more of investors. It will enhance more investors' confidence, being one of the mandates of Securities and Exchange Commission. So in that case, it's not a necessary of a capital market operator. If they revoke their license, that's the end of investors' investments. But now with the new ISA, we can now say, okay, yes, not only bankruptcy, not only negligence, also revocation of licenses is included. Thank you.
All right. So taking a look at some of the reforms that are being presented, one very big issue is the issue of compliance. Now, what challenges might operators face in meeting the new compliance deadline? We spoke about it earlier on, with the deadline being set at January 2026. It's quite close.
Okay, so I guess you're talking about the new when it comes to registration of all tradable instruments. I don't think we're going to have issues with compliance because most of these instruments are already registered with Securities and Exchange Commission. So coming out with that license is just to ensure that all tradable instruments that the general populace or general public is trying to invest on, we have everything under the cover and the management of Securities and Exchange Commission. So it won't be an issue of, an investor or a public person out there is trying to invest, and at the end of the day, it's just like a Ponzi scheme. So in the compliance aspect of it, we are not going to have an issue because most of those instruments are being registered with SEC.
All right, so still looking at consumer protection, of course, protecting the people. Now, from Ponzi masterminds to insider traders, the SEC is now having sharper teeth. At least that's what we're seeing on paper. Now, how does the Act enhance the SEC's investigative powers, especially regarding market abuses as well as Ponzi schemes? I'm throwing that to Mr. Samuel.
Yeah, thank you very much. And just like we had mentioned earlier, the fact that the ISA had pretty much expands the power of the SEC to be able to pretty much from the end to end, from every end of the capital market operators. It has really much given them the power to be able to do a lot more things. So the right to be able to call and obtain records from fund managers, to even subpoena witnesses, inspect their books, and if possible, even freeze suspicious assets more quickly compared to initial acts that we have. I think that has also pretty much improved, enhanced the power of the SEC to be able to carry out their major mandate, which is to regulate the capital market and ensure that public funds are also pretty much safe, right? There's also explicit attention to virtual and Ponzi models don't forget, before now, we've had quite a number of Ponzi schemes. A number of them had stripped millions and billions of nairas of Nigerian money. And most of these are pretty much from the virtual side of things. And what the SEC is trying to do now is to curtail any form of abuses from that end. And I think the ISA pretty much does that. It's just how we'll see that going forward in terms of implementation. But I think we're really on the right track. And the ISA pretty much does that for us.
All right, so just taking a look at, the Act once again, a modern market isn't, of course, just about policing. It's about unlocking capital and deepening participation. So how will the updated framework support capital formation and deepen Nigeria's financial markets?
Yeah, I think it's no brainer, right? In any market, if you want to be able to achieve success, you want to be able to improve investor confidence, there needs to be a high level of transparency. For every efficient market, information should be able to move the market. And I think that's where the SEC is trying to move into, where the level of transparency drives the level of participation in the market. And if the SEC can drive that level of compliance around regulatory oversight in the market, what happens is that investors tend to have a lot more confidence in the market. Capitals are more deployed into the market, and we start seeing the depth of the market being richer. I think that's pretty much a good thing as we move forward, going forward.
All right, so at the end of the day, reforms have to translate to real value for the economy and not just regulatory paperwork. So what economic benefits can Nigeria expect from a more transparent, innovative, and globally competitive capital market? Oluwarinumi.
Okay, thank you so much. So with the new, key areas in the new ISA 2025. So the mandate of Securities and Exchange Commission, its job is to boost the investors' confidence, and at the same time, part of it for financial inclusion. So with all these new ISA updates and here and there, we expect that we have more tradable instruments, especially when it comes to the side of the virtual assets that is coming into the market. And of course, we have to consider that in doing that, it's not just a tradable instruments cut across equities, derivatives, and all that. The general public adds more assets to trading. So if they have more assets to trade, add more assets to invest in, then we are sure of the positive impact on the economy at large.
All right, that's all the time that we have for this discussion. And that was Oluwarinumi Olawale, Compliance Manager for WealthBridge Capital Partners Limited, and Sama Oyekanmi, Research and Insight Lead, Norenberger Financial Group.